What is it about Bitcoin that makes it so secure? And how does it actually work anyway? You've probably heard of Bitcoin, the digital currency that's been making headlines for years. But when you try to learn more, you're hit with a wall of technical jargon that's tough to understand. You're not alone. Many people are curious about Bitcoin, but the complexity of it all can be overwhelming. Imagine you try and have a conversation about Bitcoin with a friend, but every time you ask a question, you're met with terms like blockchain, mining, and cryptography. It's like trying to learn a new language. But what if you could understand the basics of Bitcoin in simple terms? What if you could grasp how it works without needing a degree in computer science? Let's break it down step by step and explore the inner workings of Bitcoin. You'll be surprised at how straightforward it is once you cut through the technical mumbo-jumbo. And here's the surprising part. The security and uniqueness of Bitcoin are actually based on some pretty simple principles. So, let's get started and see if we can demystify Bitcoin together. To really understand Bitcoin, you need to know how it's made, and that's where we'll start next. If you want to learn more about Bitcoin and how it works, be sure to subscribe for more explainers. Vocabulary: blockchain, mining, cryptography, cryptocurrency. What if you had a digital ledger book where all your transactions were recorded, but instead of being kept in one place, it was copied and shared among thousands of computers worldwide? This is essentially how the blockchain, the underlying technology behind Bitcoin, works. Imagine you're sitting in a large library with thousands of identical books, each representing a copy of the blockchain. Every time a new transaction is made, it's added to a new page in each of these books, and once a certain number of transactions are collected, they're bundled together into a block. This block is then added to the end of each book, creating a chain of blocks, hence the term blockchain. And here's the surprising part. Because each of these books is an exact copy, if someone tried to alter a transaction in one book, it wouldn't match the others, making it nearly impossible to alter the blockchain without being detected. This decentralized, digital ledger system is what gives Bitcoin its security and transparency, allowing you to trust that your transactions are accurate and permanent, without needing a central authority to verify them. As you start to understand the blockchain, you begin to see how it's the foundation of Bitcoin's power, and that's what we'll continue to explore. Want to keep understanding how Bitcoin actually works? Vocabulary: blockchain, decentralized, transparency, ledger. What if you were trying to solve a huge puzzle, and the first person to solve it got a reward, but more importantly, got to decide what goes into a public book that everyone uses? That's essentially what's happening with Bitcoin mining. You're sitting in front of a powerful computer, and it's racing against thousands of others to solve a complex math problem. The problem is so hard that it requires massive computational power, which is why miners use specialized machines that consume a lot of energy. Now, here's the part most people don't know. The math problem is designed to be incredibly difficult to solve, but easy to verify. Think of it like a combination lock. It's hard to find the right combination, but once you do, it's easy to check that it's correct. And that's exactly what these powerful computers are doing, trying to find the right combination to unlock the next block of transactions and add them to the blockchain. The first miner to solve the problem gets to add the new block and is rewarded with brand new Bitcoins, which is how new Bitcoins are introduced into the system. This process not only secures the network by making it extremely difficult for someone to alter the blockchain, but it also ensures that everyone agrees on what transactions have taken place. And here's the surprising part. This entire process happens without a central authority controlling it, making Bitcoin's network truly decentralized. You're now one step closer to understanding how Bitcoin actually works. To learn more about the inner workings of Bitcoin, consider subscribing to our channel for more explanatory content. Vocabulary: blockchain, cryptocurrency, decentralization, computational. You're about to send some Bitcoin to a friend, and you're wondering what actually happens when you hit that send button. You might think that the Bitcoin is somehow physically moving from your wallet to your friend's wallet, but here's the surprising part. It's not actually moving. What's happening is that the transaction is being broadcast to the entire Bitcoin network, kind of like sending a message to a big group chat. This message says, "Hey, I want to send some Bitcoin to this person," and it includes all the details like how much Bitcoin and where it's going. Miners on the network pick up this message, along with a bunch of other transactions that are happening around the same time, and they verify that everything looks good. They check that you actually have the Bitcoin you're trying to send and that the transaction is valid. Once they're satisfied, they bundle all these transactions together into a new block and add it to the blockchain, which is like a big public ledger book. And here's the key part. This new block is then copied to every single computer on the network, so every copy of the ledger is updated. This is how the Bitcoin network keeps track of who has what without needing a central authority to oversee everything. It's a pretty clever system, and it's what allows Bitcoin to work without a bank or government in charge. Now that you know how transactions actually work, you might be wondering, what stops someone from just making fake transactions and trying to cheat the system? Vocabulary, blockchain, miners, transactions, ledger. What makes Bitcoin so secure, and how does it prevent someone from just altering the records to their advantage? You're probably thinking, if all transactions are recorded on a public ledger, couldn't someone just hack in and change the numbers? But here's the part that makes Bitcoin virtually unhackable: the consensus mechanism. Think of it like a giant distributed accounting office where thousands of independent accountants are all working together to verify and agree on the state of a ledger. In Bitcoin, these accountants are called miners, and they use powerful computers to solve complex mathematical problems. The first miner to solve the problem gets to add a new block of transactions to the ledger, and in return, they're rewarded with brand new Bitcoins. But here's the surprising part. For their new block to be accepted by the rest of the network, they need to get at least 50% of the other miners to agree that it's valid. This is called consensus, and it's what makes the blockchain so secure. Because if someone tried to alter the records, they'd need to convince more than half of the miners to agree with their fake version of the ledger, which is virtually impossible, given that there are thousands of independent miners scattered all over the world. And that's what makes Bitcoin's consensus mechanism so powerful. It ensures that all computers on the network agree on the state of the blockchain, making it virtually impossible for a single entity to manipulate the ledger. Now that you understand how Bitcoin security works, let's move on to the final piece of the puzzle: how the Bitcoin network actually processes transactions and what that means for its future. Vocabulary, blockchain, consensus, miners, ledger. All right, so now that we've gone through all the details, let's wrap up what we've learned. You're sitting in your seat, maybe a little curious about how those numbers on your phone can actually mean something real. Here's where you stand. You know now that Bitcoin isn't this mysterious magic. It's just a clever use of technology to ensure security and consensus among all the participants, like how we vote in an election, but with much more complexity to prevent cheating. You've seen how transactions are verified through a network of computers solving complex math problems, and these computers come together to form a consensus on who owns what. This is done through something called a blockchain, which is like a very long chain of blocks, each block containing information about the previous one, making it incredibly hard for anyone to cheat or change anything in the past. And you've understood that Bitcoin transactions are recorded publicly, but remain anonymous thanks to pseudonyms and cryptography. It's not just about owning virtual money. It's about trusting an algorithm so much that people around the world agree on its value and keep track of it together. So, back to your phone or computer, you can see those numbers as pieces in a grand puzzle of trust. You've seen how it works and why it matters. This is real stuff happening right now, shaping economies and financial systems all over the globe. Now, if you want to dive deeper into understanding markets, trading, and other forms of decentralized finance, there's so much more to explore, like understanding how order books work or what stablecoins are and how they impact the market. So if you'll never look at a Bitcoin or any complex financial system the same way again, what do you think you should do? You know what to do.